Hey traders, welcome to Master the Market, where we help you become a market master. In this video, we're going to talk about why your day trading strategy is not working and the simple steps that you can take to turn that losing strategy into a winning one. So first and foremost, you do need some kind of strategy in order to follow through with this video. I have a playlist here on YouTube on my channel that is going to break down some different trading strategies. There are ones for buying dips, there are ones for buying breakouts, there are ones for short selling stocks, and so on and so forth. So if you're interested in learning some day trading strategies, after you finish this video, go ahead and check out some of those strategies in that playlist. Now, whether you're using a strategy like the opening range breakout strategy, or if you're using a simple chart pattern, maybe like a bull flag pattern, whatever it may be that you're using for your trading, you probably have noticed that it's not quite as successful as it may be made out to be. And the simple fact of the matter is that somebody can have success with one trading strategy while someone else might be losing with that exact same strategy. It's all going to come down to execution, and what we're going to talk about in this video is how you can improve your execution to better execute your trading strategy. What this is going to come down to is tracking data. I've talked about this before on my channel, so if you've heard this topic already, make sure to stay tuned and continue watching. We're going to get a little bit more in depth in this video and talk about how this can really benefit any different trading strategy that you're using. But with all of that being said, the way that I like to track data for a specific strategy is to use a scanner or a screening software. This is Trade Ideas. This is a scanning software. All of these scanners are live streamed to our members in the Market Master group every single day. So if you're interested in accessing these scanners, make sure to join us in the group. There's a link down below in the description to get signed up. We have scanners here for opening range breakouts, scanners for crossing the VWAP, scanners for pulling back into a Fibonacci retracement level, high relative volume, intraday momentum, parabolic scanner, and overbought and oversold scanner. One of the scans that I've been using very frequently lately has been the parabolic scanner. This is going to find stocks that are spiking up very quickly to the upside. They have strong upward momentum and they're going a bit parabolic. So for example, today I actually traded the stock POET. This was one of the first stocks that was hitting the scanner this morning. It started to hit the parabolic scanner at $2.05 per share. I've popped up a screenshot onto the screen right now showing you my executions for this trade. The red arrows to the downside are where I took a short position, and the green arrows to the upside are where I covered that short position and locked in profits. I ended up with $510 in profits on this trade, and this trade was straight off of this parabolic scanner. So how did I know that it was a good time to short sell POET even though it was spiking to the upside on the parabolic scanner? To sum up the answer, it really comes down to the data once again. This is data that I've extensively tracked. Here is just a very, very, very small example of that data. And what this data is showing me is the date, the symbol, the percent change from the previous day's close, the volume, the price that the stock first started to hit the scanner at, what the difference is then from that price to the high, from that price to the low that followed, and whether or not the stock closed beneath that price at the end of the day. Once you have some kind of generic trading strategy and you start to track this type of data for that strategy, you can start to find averages on how these stocks typically react once they start to hit your scanner or once they pop up on your radar. And you can then use those averages to improve your entries and your exits from the trades. So for example, we obviously would want to have more data points than we have here for this example, but this is showing us that on average from the first time the stock is hitting the scanner to the high of the day that follows, these stocks are going 14.93% higher. Still, even though they're typically going higher from that price, about 75% of the time they end up closing the day underneath that price, which in my opinion means that there's a good opportunity there to look for a short position to short sell into that parabolic move. That is the exact concept that led me to short selling POET today for a $510 profit. And although that is nice enough on its own, another really big benefit of tracking data for your strategies is you start to realize where the outliers are in the data, and those outliers then you can avoid if that would lead to a loss, or if it would lead to a bigger profit, you can then start to really hone in on those outlier setups and really capitalize on the big movers. So this same information applies to pretty much any strategy or chart pattern that you might be trading. For example, one of the strategies that we trade a lot in the Market Master group is the opening range breakout strategy. This looks to take advantage of the stocks that have momentum in pre-market and capitalize on a big push to the upside once the market opens and once that volume really starts to pour in. Today, one of the biggest gap ups in the market was AMST. And if you're familiar with the opening range breakout strategy, what you want to know is the high and the low of that first 5-minute candle. So the high here is going to be $3.91. That's going to be our opening range breakout level. And the low down here is going to be $3.43. That's going to be our risk level for this trade. So in theory, with this strategy, what you would do is buy into this breakout once it starts to push above that opening range high. And from that move, there was an opportunity to capitalize as it pushed from $3.91 up to a high of $4.34 just a few minutes later. Now again, if you are tracking data for these opening range breakouts, what you have to determine is whether or not that is kind of an average move. Do these stocks tend to go 5%, 10%, 20% above their opening range? If through tracking your data you find that the answer is 10%, then once the stock is about 10% above that opening range high, you can start to at least lock in a portion of your profits to make sure you're minimizing risk and to make sure that you're locking in some profits for the trade. On the other side of the spectrum, you can start to see what characteristics do these stocks have that tend to have false breakouts and then come straight back down. So that way you can avoid buying into those ones and you can focus more on the opportunities that are going to have a stronger breakout, because those are the ones, of course, that you really want to capitalize on. Alright, so thanks for watching this video. The answer to why your day trading strategy is not working is because you probably just don't have the data to better execute that strategy. And even though tracking data is a process, it's going to take time. After all, day trading is a job, it's not just a hobby, so it's definitely work that is worth putting in. But regardless, I hope you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And of course, if you want to join us in our group chat, get access to our day trade and swing trade alerts, our detailed trade plans, our live custom scanner streams like we have on the screen right now, all of that can be found in the Market Master group. There's going to be a link down below in the description for you to get signed up. Anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.